Now it is going to get super interesting because we are going to put to use everything we have learned so far. Understanding the whats and whys is crucial to imply them in your house. So how do you select stocks to invest in? First things first, before you start investing, you must know your goal. This will not only help you stay focused, but will also help you filter out the best stocks. Your goals could be investing for long-term, future expenses, receiving dividend income, planning for retirement, and so on. Let's suppose you want to invest in some long-term gem that you want to buy and hold. With 5,000 plus listed stocks and so many parameters to consider, how do you select a few stocks that may prove to be good for the long term? Here's where filters play a great role in sorting the desired kind of companies. In our previous videos, we learnt about various metrics and ratio analysis to look at them before. For long-term investment, there can be a few important metrics like quality of the stock, that is how risky it is. Do you want to invest in a small cap or a large cap company? For most long-term strategies, large cap stocks are preferable. Second, we move to the income statement and check its revenue growth in the past few years. 3 to 5 years can be considered a good time period to have a fair look. Third, after the company's top line, that is revenue, it's time to check the bottom line, that is the profitability ratios. Here, you can check ROI, ROCE, ROA, etc. Lastly, you want to ensure that the company you are choosing is financially stable and secure. Hence, you need to check the solvency ratio. Now that you know what kind of stocks you want to invest in and the filters to put in, let's head to the Tickertape stock screener and start filtering based on your desired metrics. First and foremost, you'd like to apply the market cap filter. For a low risk, decent return, you'd most likely want to invest in the top companies. So, you could choose to invest in Nifty 500 companies. You can play around with the stock universe in this section. Once you have filtered out close to about 500 stocks, you can filter out the company historical revenue. For this, you can look at both the 5-year historical revenue growth and 1-year historical revenue growth. Both should ideally be more than 10%. This will ensure that the company is stably growing its business. After the company's performance, you can look at its return ratios. In case of long-term investing, two of them are the most important. One is ROI and another is ROCE. Filter out stocks that have more than 15% ROCE and a 5-year average ROI of more than 15%. After performance and returns, the next thing you should look at is its solvency ratio. Since you are investing for the long term, it is important to consider its debt to equity ratio. An ideal filter would be to find a company with a debt to equity of less than 50% or 0.5. This will ensure that the company you choose doesn't have access to debt that can put the company in trouble. These filters will give you potential investments. You can add more filters if you like on the Tickertape stock screener to narrow down your list further. Similarly, based on your requirements, you can use pre-built screens on Tickertape that can help solve your problem of searching for filters in a few clicks. For example, in order to invest for your retirement, you can explore Retiring in Style screen. For growth and momentum stocks, you can explore Growth Bargains and Momentum Monsters respectively. These pre-built screens apply appropriate filters to provide you with a list of stocks based on a predetermined criteria for specific needs. So go do your own research, make some genuine use of filters, and we hope this course made it easy for you to understand the art of stock picking. This is Shyam Agarwal signing off. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.